Hi, this is Adam Hewison. I'm coming to you from the digital studios of Market Club, and this perhaps is my most unusual video that I've ever done. And I want to share with you today something that's pretty interesting in the marketplace, and that is trading when it makes sense to trade against a trend. Okay, so what we're looking at, just to give everybody an update, we are on July 22nd, it's a Tuesday, and it's 3:25 Eastern Daylight Time. So it's in the afternoon, about a half an hour before the close. And what I want to share with you is this. Last night, Apple Computer, right here, basically announced their earnings. Huge disappointment to the street. The stock opened dramatically lower. You can see it opened right here. And I want to show you why it kind of made sense to buy right here against the trend. Why would anyone do that? Especially when we keep preaching trade with the trend. So let's just take this off the screen, and we're going to go to our Java charts and scroll this down. As you can see, this is why it makes sense. We've got a very weak downtrend for Apple. Okay, you've got the last hourly charts are up. However, the 3-day, the 20-day moving average, and the 3-week are all red. However, the most important thing in Apple or any stock is going to be this one right here, because we give it a higher weighting of 30 as opposed to 25. And we made a 3-month high in May, which is right here, and we've been coming down since then. But let's take a look at the Java charts and see what we can come up with. So we just, very simple with Market Club, you just click here. So here we are, we're looking at a daily chart of Apple, and as you can see, it had a huge break from Monday night after they announced the earnings. We sort of opened way down here, kind of like off the charts, and we've steadily come back all day. We're currently trading 158.58. So we've got a strong blue bar, much like this one, but I want to show you the significance of this particular one today. Now, to get back to our triangles, I'm just going to simply go through. There's our quarterly triangles, there's our daily, our weekly, and as you see, our weekly was basically get out of Dodge, get out of Apple at 172. Proved to be a very, very good place to get out. The market's obviously $14 lower. And I'm going to go to our monthly. Now this is where it gets to be very interesting. Here's our monthly chart. We have a buy signal right here at 180. Now the market's at 158. I understand that. Now, as you know, we use a 3-bar change. And when Apple got down to here, it was very close to the previous low bar, 3-month low bar, excuse me. So the risk of buying Apple here was, I think, very small. And obviously we've seen a pretty good run up since we've got to this level. So let's just take this off the screen, actually take it off the screen, and we'll go a little closer so you can really get this concept. Okay, so here is, this is the bar, this is the July bar on the monthly. Obviously there'll be June, May, and April. Okay, so this is the low that we really want to look at right here. And you see how close we got to it right here? Incredible. And the market just reversed up. Now, whether that's a big reversal remains to be seen, but I think it probably is, and it's probably the low we're going to see for Apple for quite some time. Now, taking this off the screen, I want to just clear the screen, and I want to go to our indicator to show you exactly what the level was. On both this around here, it shows the low was 144.54. This is the low we're seeing in April, and we want to look at what the low was today. So the low today was 146.53, and we're seeing the low here at 144. So you had really like a $2 or $3 risk on here. In percentage terms, less than 2% to buy a major market, and that's exactly what we did today for my own account. I'm not going to discuss my own trading, but this is how I think sometimes you have an opportunity to get into a market with very little risk. Now, had we seen this market open below this level, let's say down here, then all bets would be off. We'd have to change our analysis. But as it happened, it found good support. The risk point, your stop out point, was just a couple of dollars, and you've already got about $10 profit in this stock right now. So let's take this off the screen. Scope this out a little further. I'm going to go to our weekly chart. I want to see everything in the chart. Just click here. Take everything off the screen. I want to go a little bit closer in because I want to show you something that's pretty interesting in Apple. If you can see here, we have a significant low here, significant low here, and this is going to be, in my opinion, a significant low, and the chances are once we see Apple stock go above a 3-week high, then I think we can safely say that this market's going to go significantly higher on the upside. But this is what we need. So Apple needs to move over a 3-week high to regain upward momentum. That's what we're looking for now. Apple, the monthly trend is still positive. The weekly, however, is not. When this market, if it does in fact move over the 3 weeks, we want to be aggressively buying this market because it would look as though we could see a move to the 230, 250 area. So let's watch that very closely. This is Adam Hewison for Market Club, looking at Apple and watching how sometimes it makes sense to trade against the trend.